Is there anyone who can give us the recap of what we have covered so far? Because today we are concluding this topic as we agreed last week. Any volunteer to give us the recap of what we have covered so far?
So far, it's still, I'm still chewing everything. Whatever thing that you taught us, so I can't so far.
All right, you are still digesting.
Yeah.
Right, anyone else? Is there anyone who is ready to say something?
We talked about temporal differences.
Right.
If carrying amount is greater than.
Just in my hand.
Someone is talking on the background there.
Oh, sorry. No, it's me. I wanted to raise my hand.
Okay, all right. You talk after Mbongene there.
Okay, cool.
I think carrying amount is greater than temporal difference is a tax liability, and the other way around, if it's carrying amount is less than temporal difference, is also tax liability, and then a deferred tax asset is whereby carrying amount is less than temporal difference, and the carrying amount it's an asset, and a liability is carrying amount will be greater than temporal difference. Then it's a deferred tax asset.
All right, that's okay. You are still continuing. All right, continue.
Continue. Current tax is 28%.
All right. Okay, continue if you are still continuing. All right, thank you so much for your contribution. Anyone else?
I think on my side, he already said what I wanted to say, and last week I was not in. Yeah, so far we have covered the profit before tax, current tax, non-taxable deductible of exempt differences, current tax is calculated on taxable income, and the what? And the different tax that it is calculated on temporary differences. And what else? Yeah, I think, and the statement of financial position calculations.
All right. Right, someone else. We want to see whether there is light or not. Someone else?
Can I say temporal difference? Carrying amount minus tax base is equal to temporal difference. Am I right?
Yes, you are right. You are very, very right. You are 100% right. Right. Everyone should say something.
And then
Faith,
can I say,
except for Faith.
but in measurement, is it in what initial measurement? Deferred tax to debit, deferred tax, profit and loss, ne?
Uh, uh,
The journal.
Why didn't tell me that there are people waiting? Sorry. Right, deferred tax. You're right. I get what you're saying.
We debit deferred tax and profit and loss, and then deferred tax liability statement of financial position.
All right.
In
For now,
yes.
allow me not. Yes, allow me not to comment on what you are saying. What I'm trying to establish here, it's your understanding so far, ne?
Mm.
All right. Allow me not to comment whether what you are saying is correct or not correct. I'm just assessing your understanding. Right. Let's give someone else a chance. Anyone else to give us the summary of what we have covered so far? Let me hear from you, good people. Right. Can someone give us the summary of what we have covered so far?
Recording in progress.
What's happening? Why is it? Right. I'll just pick random. There's no one who's a lawyer here who will take me to court, ne? Right. Faith, I think you have two gadgets on there. That's why we have an echo. Right. Portia, did you say something? I'm starting from bottom. Portia.
It seems like I don't have a network.
Your network is poor.
Yes.
No, I'll give you just 30 seconds to give us the summary of what we have covered so far, what we have understood.
I think it is. There's echo, I don't know. But what stuck in my mind is the current tax. So you've mentioned that when we do the calculation of current tax, the first stop is profit before tax. Can you hear me?
Yes, we can hear you, Portia.
Yes, I
Yes.
can hear you 100%.
So the first stop, yes, is the profit before tax. You've also outlined how we calculate the profit before tax, as well as the non-taxable deductions, such as your what's this? Your dividends, yes, your dividends, your other things. And also you have also explained how to do the calculation on financial statement of financial position under deferred tax. I think this is where we will check if the carrying amount as well as the what's the other thing? The carrying amount, where we check if the carrying amount on the asset is greater than the tax base, tax base, and then we would know if it's greater than the tax base or if it's less than the tax base, then it will automatically, we would know which sign to use with the taxable, what's that? Yeah, something like that. I don't know if you guys understand what I'm trying to say.
All right. Thank you so much. I wanted to hear what you have so far understood. What happened here? Right, Peggy, anything to say?
I haven't. This is my first class. I haven't really catch up with the previous 2 classes, so I'll catch up with those ones. And yeah, you can ask me on our next meeting. I'll
Alright.
catch up.
The recordings are there on, in the group. Go through them. London.
Yo,
Anything to say?
hello.
Hi, how are
Unfortunately,
you?
it's my first time to attend Claro.
Hey.
So next time, yeah, I'll say something.
Right, okay. Ngani, we have newcomers today. Mashako, you said something, I remember, ne?
Yes, I did say something. Okay. But last week I was not in. Maybe I can add up on the time when I was in on the first week, right?
Okay.
I have explained that we have started with the current tax and how we calculate that. We started with the profit before tax, and then we went to non-taxable, deductible, and exempt differences. And then we will add both dividend, the 20% sale of asset, foreign income, fines and penalties, profit after tax, exempt items, movement, and temporary differences. And then we get the taxable income. And then we take the amount for taxable income and calculate with 27% for current tax, and then that's where we get our total. And then again, we went to, where is it? Let me check here. The different tax, how is it calculated? And then we have explained that the different tax is calculated based on its temporally defined differences, and then we also show us some calculation between the carrying amount and the tax base. If I'm not mistaken, I remember you said 100, we minus it the 60, and then it gave us 40% for different tax. Again, it was the taxable, it was taxable different tax differences, yes. And then we were having four kinds of the taxable differences. Number one, we had the carrying amount. And then it said asset is greater than the tax base of asset, and then it gave us taxable differences. The second one, it was a carrying amount. It's got to liability is less than the tax base of liability, and then it gave us the taxable differences. Yeah, and also you show us the calculation of the statement of financial position method. And then on the statement of financial position method, we had a carrying amount, tax base, temporary differences, yeah, and the different tax.
All right, thank you so much. I think everyone has contributed. You have said what you understood and so forth. All right, today we're going to look at disclosure. People, we have looked at how we calculate current tax, and we have looked at how we calculate deferred tax. What is left now is disclosure in form of notes. Right, when it comes to disclosure, fortunate or unfortunate, we follow a prescribed format. So in terms of disclosure, right, if you have a study guide that is, remember I said to you, the study guide, which is bit detailed, is the 3701. The 3764 is not detailed, it's just a skeleton. Right. Yes, that's why I'm using the text 3701. The topics is the same. And not text or FAC. Yes. Right. So when you are required to disclose, you do the following. right? You start by writing the name of the entity, right? You write this, right? Why is my pen not responding? You write this, you're going to write the name of the entity. If it is LTD, you're going to write LTD, notes for the year ended 2023, if it is 2023, right? You have your income tax note. You write your income tax note as it is. Let's say it's 1. Let's just say we are required to prepare the income tax note. So you're going to write your income tax note. Your income tax note is made up of what? We have what is called major components of what? Tax expense. Major component of what? Tax expense. Your major components of tax expense, there are 2. We have what is called current tax and deferred tax. Your current tax is what you calculate using the what? Where your departure point is profit before tax. That you know, you do your profit before tax, you go to your taxable income, and then you get your what? Your current tax, right? We're saying this current tax, you have current tax for the current period. If your taxable income for the current year is 10,000, you say 10,000 times what? 28%. Then you get your what? Current tax for the current tax period. Then again, you can have current tax rising from under or over provision in prior what? In prior year. We will talk about under and over what? Provision. Right, so these 2 will give you this balance of what? Of current tax what? Expense. Then your other tax expense comes from deferred tax. Remember, from deferred tax, we say we calculate deferred tax on temporal difference. So movement in temporal difference will result to what? To deferred, will result to deferred tax. Last week we did the question where we calculated deferred tax for, let's say, year 2022 and deferred tax for 2023. Right. We said movement in temporal difference, which is 2022 temporal difference, let's say it's 400. And then the movement, and then our 2023 temporal difference is 500. Right, the movement in temporal difference here is going to be 500 minus 400. We have a movement of 100.
100.
This 100 will give us a deferred tax. Deferred tax calculated where? A deferred tax calculated on temporal differences. Or the other way to get to this deferred tax, you just calculate deferred tax on this 400. 400 times 28, let me say it's 10. I'm doing it for simplicity purposes. And then deferred tax on 500, let's say is 12. So our deferred tax for the year will be just a movement from 10 to what? To 12.
12.
Yes, you can calculate it on movement on temporal difference, or you just check the movement in your deferred tax. It will be your deferred tax for the year. Right, then also change in tax rate will result to a deferred what? Or result to deferred tax. Let's say in 2022, a tax rate was 27%, 28%. Then in 2023, your tax rate is now at 27%. So there's a movement of what? There's a change of 1%. So what you do is you are going to take your temporal difference for the previous year, multiply it by change in tax rate. Change in tax rate here is 1%. So you're going to say times 0.01 or just times 1%. Some calculators will allow you to say times what? A percentage. That's what we include here. All right, so this is the part of income tax what? Income tax note. If you are required to prepare a tax note, make sure that you present it in this what? In this manner. Right, then this part we don't need it at our level. Then after that, they can say prepare a tax note together with the tax reconciliation. You can be required to prepare a tax note together with what? Tax reconciliation. Right, with tax reconciliation, we present it in the following manner. You start with your accounting profit. The accounting profit which you adjusted to get your taxable income. So you're going to say your accounting profit as per the way it's calculated in what? In accounting. You put it here as it is. Then you come here as tax at standard rate. That is 28% of your accounting profit or 27% of your accounting profit. You get the amount here. Then tax effect of. Now you have to go back to your calculation of taxable income. Right. In your calculation of taxable income, you started with your accounting profit, then you adjusted it for what? For exempt differences. You import all those items included in your what? In your calculation of taxable income. These ones. If you have these ones, you take them as they are. You take the amounts. Let's say your dividends or your taxable profit is 200. You are going to say 200 times the tax rate, 28%. Then you get this amount. What did you do there up there with non-taxable capital profit? You deducted it. So you come here again and deduct it. Then dividends income, you take the amount again, you multiply it with the what? Tax rate, deduct. Fines, what did we do with fines? We added them back because we said they are non-deductible. So you do the same. We check the amount of fines, multiply. And then donations, same thing, right? The only thing which is not there is under or over provision of what? Of tax in the prior year, right? You put the amount of the tax here, and then your adjustment to the tax rate. If there's any adjustment, you write the adjustment here. Then you are done with your what? With your tax note. Right. So if when you are required to do a tax note, you think of this format. It's easy to to understand it. It's easy to understand it because there's nothing much included here. This part is a duplication of what you have already done as part of your calculation. You cannot do a tax note without calculating your current tax, without calculating your deferred tax. So this is a repetition of the calculation of what? Of current tax. These are only 3 line items which you can memorize. Right. Remember last week we did a question on the calculation of current tax. So today we are going to continue and do the what? The tax note there. We are going to continue with that question and do what? The current tax what? Current tax note. Let me see this one. Is this simplified or what? Right. All right, let's go to that question which we did last week. For those who did not attend, it's unfortunate, but what we have to do is to just follow what we are going to. Is this one? Do. Right, we did this question. It's not the one. This is text. All right, last week is this one, I guess. Right, we did this question last week. Those who were in class, I guess you did write down the solution. Did you? Those who were in class last week, did you write down the solution? If not, then it will simply mean
Yes,
that
we did. I
you
did.
did write down.
Yes.
All right, let's build on it. All right, so the required was, let's go to the required. Required B, they said disclose the income tax expense note, including the tax reconciliation using rand value in the notes to the annual financial statement of Brickblock Ltd for the financial year ended 31 December 2022, according to the requirements of IAS12. How many marks is it? It's 26 marks.
26.
All right, these 26 marks, they are coming from what? They are coming from the calculation of current tax, the calculation of what? Of deferred tax. Because you cannot do the note without calculating what? Without calculating your deferred tax and your current tax. Are we together there? So we did the calculation last week of your current tax and deferred tax. The recording is there, good people. Those who were not there last week, don't get stressed. You find the solution in that recording. Right. So what is it that we want? We want to prepare a note. All right, we are going to start with the name of the entity is Brick Block Limited. We are going to say Brick Block Limited notes to the annual financial statement. Financial statement for the year ended what? For the year ended 2022. I'm not so sure whether there's a mark for this heading. I'm not so sure whether there is a mark for this heading or not. But what I know is you need to write the heading. The heading should be provided. Right, so what is it that we want? We want the income tax note, people. We want to present the what? The income tax note. Income tax income tax note. That's what is required. Nothing more, nothing less. Simple, the income tax note. Right, our income tax note is made up of major components. We have what is called the major components, right? With notes, remember, you can have 2 or 3 notes. So they only want the income tax note. So we're going to label it number 1. We have what is called major components. Major components. Right. We have major components. Our major components is current tax. Current tax. Our current tax is made up of what? Our current tax is made up of current period or current year. Current what? A year or period. Current period. What did they say in that thing? And what? And under or over. Under or over a provision. Right. Then and it's made up of what? Deferred tax. Deferred tax. Deferred what? Tax expense. Expense. Our deferred tax expense is from what? It is from movement in temporal difference. Movement in TD and what? And the change in tax rate, ne? Change in tax rate. Right. And then after this, we have our what? We are going to have our income tax expense. Or one you say effective rate. Income tax what? Expense. Right. We only do for 1 period. Comparative, you're going to meet it next year. That is, you decide to take a CTA. Right, so let's go to our information and get these amounts. Let's go to our information and get these what? Amount. To our solution, not information per se. We calculated our current tax here. We have our current tax. There it is, 207,145. You are just importing now. You are what? Importing. I said to what? 207,145. Right. 145. Right. Then under or over a provision. Right. Under or over provision. I don't remember last week. Right. Let's go to our information to see whether we have under or over provision. Right. Note number 7 is talking to taxes. That's where you are going to get your over or under. Right. Remember, I said to you, let's skip this part, then you attend to it. What's happening? A second. Right, over or under provision. We get it from note number 7. I remember last week saying to you, we'll address this one when it comes to what? When it comes to a text note. Right, what are they saying? On 15 June 2022, my previous must be on 15 June 2022, Brickblock Ltd received a tax assessment for 2021 tax year, which reflected amount of 800 as they assessed the taxable income. Right, so we received the previous year assessment from SARS. You know the story when it comes to calculation of tax liability. Companies, they pay provisional tax, first provisional and second provisional tax. It can happen that SARS assessment, or it can happen that according to SARS, you have an underpayment or an overpayment. So if you have an overpayment, you get a refund. If you underpay SARS, there's a penalty. You pay a penalty, and again you pay the outstanding amount. Right, so let's see what happened. SARS is saying we have a taxable amount of 800,000. The current tax expense disclosed in the statement of profit and loss and other comprehensive income of Brickblock for the year ended 21 December amounted to 220,000. Right, so according to our information, or according to our financial statements, our tax expense for the previous year is 220,000. Remember, how did you get this 220,000? We said taxable income times 28 what? Times 28%. We said our taxable income for the previous year times what? 28%. We are not given that taxable income. We can calculate it backward by dividing, by saying 220 divided by 28, but it doesn't matter because SARS has already given us their own what? Calculation. So according to SARS, our taxable income is 800. So the tax which we're supposed to pay is how much? Is 28% of 800,000, which is how much? Right, paid attention to this one. Over or under provision. SARS is saying our taxable income is 800,000. And to now we have already paid, we paid tax of how much? 220. 800,000 times 28%, how much is it, good people?
224. Is 224.
224.
Yes.
224. Right, is it an overpayment or underpayment? Please switch to text 3701 or text 2601 or text 3761. Is this an overpayment or underpayment?
Oh.
Underpayment.
It's an underpayment.
Oh, it's oh,
Yeah, you paid less.
it's over.
Good people.
It is over.
It's over. Overpayment.
No, it's fine. Digest it. It's okay. What I want is for you to get this.
I wanted
Remember,
to
we are in the process. We are in the process of building. At the end of it all, we should be perfect. That is in November when you are writing a final, November or June when you are writing a final exam. Is this an underpayment or overpayment?
Over.
Try to digest it there. It's an overpayment. All right, let's check it again. SARS is saying to us our taxable income is 800.
Yes.
Are we again? 1,000. And as for us, we paid tax of 220. According to SARS, we're supposed to pay 800 times 28, which is 224. How much did we pay?
It's under.
Yeah,
We
it's
paid
under.
220 instead of 224.
Yes, we have an under provision. We call it under provision. Remember this 220, we came up with it from what? From a provision. We estimated our taxable income. How do we calculate second provisional tax? We calculate it on taxable what? On estimated taxable income, that is tax. That's what we're taught in tax. How do we calculate our provisional tax? We use estimated taxable income. So this is from an estimate. What did we do? Yes. So we understated. Well, we understated. So there's an underpayment of how much? Under provision of 224 minus 220, which is how much?
4,000.
There's a 4,000. So we have under provision. So this under provision will result to us paying 4,000. We need to pay it. So you are going to have 4,000 here. So the current tax expense is going to be the current tax for the current period, and this under provision, which was supposed to be paid in the what? Previous year, giving us a total current tax expense of how much? Let's add these two amounts.
Double 21145.
2211145. Right. What I want you to get is this issue of under or over provision. Huh? This one you're going to find it in the preparation of your tax note. We don't have it in the calculation of current tax. We have never addressed it before. We're addressing it now. Why? Because it affects our what? Our tax note. If we had paid more, we're going to come here and deduct. If it was an over provision, we're going to come here and what? And deduct it. Make a note somewhere there. So under provision, you add it. Why are you adding it? It simply means that you need to pay it. But over provision, you deduct it. You overpaid in the previous year. So you get a relief, or it will reduce your current tax expense. Clear? Right, there is a paragraph in your study guide addressing under and over provision. Right, I'll take you through it after we're done with this one. Right, so that's the story with our current tax expense. Now let's move on to deferred tax. Right, our deferred tax, we calculated on movement in temporal difference. Your movement, yes. Right, we have two line items in our previous calculations showing us movement in TD. We have two line items. The first one, if you go to your calculation of profit before tax, you have this movement in TD. You see this line item?
Yes.
127,500. So we just say 127,500 times 28%. Where is it? 127,500 times 28%. Is the tax rate 28? Yes, 28. Giving us how much?
35,700.
Sorry, come again?
35,700.
700. Or you can come here. You can go to your calculation of deferred tax. Remember, this is calculation of deferred tax, né? Right, you are going to say your 2022, which is current year, temporal difference total, minus previous year temporal difference total. You get your movement in temporal difference, then times 28%. 2022 temporal difference total minus 2021 temporal difference total, which is 427,500 minus 300, then you say times 28%. You get the same answer. Right, then what else? We have change in tax rate. Is there a change in tax rate here? No, tax rate was 28% constant. It was 28%. Right, any other item? Any other item? Nope. Right, so now we have to close. Right, so we're going to say this amount plus 35,700. How much is it? 21145 plus 35,700.
2248645.
2284645.
2248645.
48.
2248645.
645. Right. What are we doing?
2248645.
2248645.
Yes.
All right, it's fine. Thank you. All right. What is it that we're doing here? We're doing our text note, né? We're doing our text note. So make sure that you understand all these line items. All right, now we move on to text reconciliation. We move on to what? Text reconciliation. Right, if you see this one in the exam, just celebrate it because you know that the marks are for free. We start with our accounting profit. Accounting what? Accounting profit. Right, our accounting profit, we calculated it here, or it was given, eh? Right, but we have it here. How much is it? It's 8,250. 8,250,000. 8,250,000. Right, then you say tax at standard rate. Yeah, after that you lock it, we call it lock here. Tax at standard rate, which is 28%. Tax at standard rate, which is 28%. Right, 28% of this profit, how much is it? 28% of 8,250.
Take this one.
2,310,000.
Take this
2,310,000.
310.
Right, Mbongeni there. Then after that, we adjust it for what exempt differences. Huh? You say, what's the term which we use? Adjusted. Adjusted with tax effect of with tax effect of, right, of exempt differences. You take all your exempt differences as they are. Exempt what? Differences. Right, you go to your calculation of current tax, your exempt differences, you import them as they are. We have dividends received, sale of asset, 80/40. All right, let's start with dividends received. Dividends received. Right, we said 40. So we are going to say 40,000 times tax rate of 28. How much is it? 40,000 times tax rate of 28. How much are we getting?
$11,200.
11,200. Then we said profit on sale of asset, profit on sale of asset. Right, how much is it? Note that you are importing this part, 40,000. Or dividends is 80. It's all the same, 80/40. So let's just say 8. The net effect is the same, né? So 80,000 times 28. How much are you
Times
getting?
2, which is times 2, which is double 2400.
You're saying times 2. Why are you saying times 2?
11,200 times 2.
Where did you get 2?
Why? Oh, why? I'm almost confused. I'm saying 40,000 is half of 80. That's what he's saying.
Yes.
Why
So it's
are you
22,400.
confusing us? 22,400. Right. Note that this should be in brackets because we deducted this. We're simply saying they are not taxable, né? Or they are exempt, so they should be in brackets. What you did here in the calculation of current tax is the same thing which you are going to do. Right. Then followed by what? Followed by legal fees, 6460. We added them. We'll do the same. Legal what? Legal fees. 6040. We said what? We said the 6040, né? Right.
6460.
Or 6.
6460.
64?
60.
Aye, aye, aye.
6460. 60460.
All right, thank you. Times 28. Right, how much are we getting?
16,928. 16,928.80.
28.8, so it's 9. We 8 because we
29.
8. Right, next is we skip to foreign income. Foreign income 190,500. Foreign income.
Foreign income.
Yes, foreign income. I think we need to do this.
190,500.
190,500. 190,500. Right, people, on this one, I think I skipped something. Yes, sorry about that. This foreign income is the one which paid tax, ne? With foreign income, if the foreign income paid tax in a foreign country, you need to take it out. I remember this one last week. All right, let's come here. Yeah, it's a good concept to which you need to get from the onset. Right, during the current financial year, BRICS received income amounting to 190,500 from Canada. That is not taxable in foreign tax. That is not taxable in South Africa. Foreign tax of 4762 is still due by BRIC LTD on this income. Right, so what you do is you are going to say 190,500 times 28%. Then you minus this foreign tax of 47,625.
That's like you.
Right, how much is it? Hey, noise there. Who's making noise? Right, what's how much are you getting? You say
minus what?
foreign income times 28% minus foreign tax paid, 47,625.
5,715.
5,750.
You said what?
Please make a note. Come again.
You said what?
You
How
say
to
your
calculate
foreign,
it?
you say foreign income times 20 times the tax rate, ne? Minus foreign tax paid.
Foreign tax paid.
Income times tax rate minus foreign tax paid. This one was not paid, it's still due, the same as it was paid. Right. Make a note on this one. You get it sometime. Sometimes you don't get it, but in the event that you get it. If you go to this note, which I used.
5,700.
All right, 5,715. Where is that note which I was using from the guy?
Where did you get
Right.
foreign tax paid?
All right, okay, it's fine. We're going to go back to it. Where's this one? Where's that thing? Right, this one is not complete. It was done in the sense that there is no foreign tax. Right, if there is foreign tax, what you do is there's no foreign income here. All right, it was just a skeleton. Right, if there is foreign income, you also need to add foreign tax here. Foreign what? Foreign tax. They don't usually test it, but sometimes it does come. Right, you are going to add your foreign tax. You put a line item for foreign tax. That is if there is foreign income and foreign tax was paid on it. You are going to take the foreign tax as it is. That one was 47 something. Right. And then you come here, you add your foreign income times tax rate minus foreign tax. All right, I'll look for the one which is comprehensive with this. I don't know why the static guide they give us one which doesn't have, but on the assignment, the testing. Right, so we are going to say foreign income times 28. How much did you get, good people? The calculation I've already given you. You got
53,340.
you said 5,000.
Angry, you said
It's
190.
5,715.
I guess I'm lost. Where did you get that?
We said foreign income, né? Times 28% minus foreign tax paid, not number 4. Foreign tax is given.
Oh, okay.
Yes, it's given.
Minus
so I'm
4,
simply saying to you, if you are given foreign income with foreign tax, just know that in your income tax expense, you need to include your foreign tax. And again, you include it in your tax reconciliation. That's what I'm saying. That's why to say do a note on it so that you won't forget. If you check your static guide, it's not included there. All right, we're fine. Any questions on that one?
The foreign tax, does it have a different rate or you use same rate?
Foreign tax is already calculated for us. We don't know how much tax they are charging in that foreign country. So they will give you the calculated amount. Yeah?
Okay.
All right.
So what to say about this note? You're saying
I'm saying to you, the foreign tax now is going to affect our income tax note. We need to come here and write foreign tax again. Remember, at the end of the day, this thing we're doing a reconciliation, it should balance. Foreign tax, you add it. With 47, what? We said 47, what?
47,625.
625. So our balance is now going to change from 224. What did I do now? All right, this back. I want to wrap this only. All right, so let me do this so that it will look neat. Right, this tax, foreign tax, people is independent from current tax and deferred tax. You put it separate. Foreign what? Tax. 47,625, giving us a new balance. I will calculate it, no problem. Right, fine. On foreign tax, after foreign tax, what else do we have under exempt differences? We have interest paid, 10,200. Interest paid, 10,200 times 28%. How much is it? 10,200 times 28%.
2856.
28,560. Right. We are adding it because
Hello,
we
56. Cancel 0. Hello, cancel 0.
Oh, 56. All right, 56.
Yes.
All right. Thank you. And then what else? I think this was the last one. Yeah, that is the last one, right? You take your under provision, your under or over provision. Tina, we have under provision, under provision. We calculated it and we got 4,000. You add it here. But then you close. Right. Why are we calling it reconciliation? The total, which is 2. Right, remember, your accounting profit, you logged it. You are not going to edit. You are going to take 2,310 minus 11,200 minus 22,400 minus 6,929 plus, sorry. Then minus 5,715 plus 2,856 plus 4,000. Give me the total.
Oh, yeah. Someone is lost here.
Where are you lost, madam? Tell us, we'll assist you. Which amount?
Can we go back to income tax note?
The
I'm
total.
lost.
Where are you editing?
All right, wait a second, Bongen. Let me assist madam here. Right, madam, where?
So where did we get 35,700? Now I'm lost. I don't have it in my
35,700 is the on movement in temporal difference. You said movement in temporal difference times 28%. It's what deferred tax.
1,275 times 28%.
Oh, okay. Oh, okay, fine. Thank
Correct.
you.
Right, Bongen, you were giving us the answer. You said it's how much?
I'm saying, okay. According to my calculations, it's 23,05670.
Right, someone else with a different answer? 23?
05670.
05670. Right.
Yes.
Are we all getting the same amount?
We're still calculating.
They're still calculating.
All right. 2,310,000 minus 11,200 minus 22,400
Plus 169.
plus 16,929 minus 5,715 plus 2,856 plus 4,000.
Today it's another day.
Why? I got different now.
Yeah.
You're getting a different amount now.
Yes, minus 15530.
Yeah.
155.
Then I got
Like,
I got two double two nine 470.
yeah, that's what I got also.
I
How
got
much? Double two?
It can't be
215,470.
You got how much, guys?
Double two.
215,470.
Yeah.
No, I got
Double
Yeah,
two
Let's
nine.
recalculate then.
nine.
No, I got double.
Double
Double
two
294,470.
0.
Right.
Awesome.
That's what I got.
Yes.
Are you
That's what I'm
awesome?
also
I got
getting.
something else, minus 15530.
Oh.
Right.
I also
Done.
got something else, 215,470.
Uh-uh.
Maybe we need to
Aye,
recalculate
that one,
then.
Monday.
Right. Listen, people, the totals do not matter. As long the market is the entries, let's not waste time on the totals, ne?
Okay.
They don't matter. It's the one who get 900, the one who get the correct total, all of you get 10 over 10, as long as these entries are correct, ne?
Oh, okay.
Right. But now, this one you can test whether your answer is correct or not. The moment you see the required saying to you, prepare the text note and reconciliation, you can mark your answer. This amount should be equal to this amount. Your income tax note total should be equal to your tax reconciliation amount. So let's add this and this and this. If we get the same amount, it means our answer is correct. If we get a different amount, it means that we're teaching each other.
We are
Right.
going to get different amount. Angere, we add tax, what?
Yeah.
We are going
I
to say
understand.
this, listen, pay attention. You are going to say your current tax, right? Plus the deferred tax, plus the foreign tax.
Yeah, it's 2294.
These two, it's one thing. They gave us that total. You are saying how much?
2294,470.
Yes, this you're right. That's how you mark your deferred tax and current tax question in the exam. If your reconciliation and your current tax are balancing, you know that you have your 26 marks. They
You
should
said
always be the same.
we could have to do it, to add those three.
Yes.
Right? Yes, because this is income tax note. Ne? We're saying it is made up of current tax and deferred tax and the foreign tax. This is going with these two. We're saying current tax is from current period and under provision. Then deferred tax is from movement in temporal difference and change in tax rate. Unfortunate or fortunate, change in tax rate was not tested. And then again, we have foreign tax standing alone. So these three line items should give us a total, which is the same total we got in the what? In the tax reconciliation. Right, are we fine?
Maybe it's money.
So if the totals are not the same, then it means one of my answers is incorrect, right? That's what you are saying now.
It means you were doing wrong things.
Okay.
All right, I'm looking for a text reconciliation with.
So it's current tax, deferred tax.
Come again.
Yeah, it's too complicated.
No, it's easy.
No, it's not.
It's current tax plus what? Deferred tax
Plus
foreign
foreign tax. Yes.
Current tax.
Or let's just say you add the totals given there. Let's just say you add the totals given there. All right. Any questions on tax reconciliation? Right. As long as you manage to calculate your current tax and your deferred tax, you'll be fine.
I think I will have questions next week again, or in private once I've practiced it again.
I need a homework.
Right, there is example 11 and example 12. They go attend to them in the study guide. Example 11 and 12. Unfortunately, there's all of them, they don't have foreign income with foreign tax. I was hoping that I'll get one. I'll look for a question where we have foreign income with foreign tax. I'll try to look for it and share it in the group there.
What's going on?
All right.
So try example 11 and example 12 from text FAC3701 study guide.
Please
Those
share
who are
the study guide
Can
in
you
the
please
group.
share the study guide?
All right, I'll share it in the group.
Our registration is not yet finalized. We're struggling.
Serious?
Yeah.
All right. That's it on text reconciliation. The recording is going to be shared. Right. Then the last thing on deferred tax, it's dividends. And right, we have to look at dividends. Right, there's just a small paragraph in your study guide on dividends, but it doesn't mean it's not test. It's the paragraph is just small, but they always test it now. They always what? Test it. So let's go to that paragraph and attend to it so that you prepare yourself for it. Right, here, this one. It's just a small paragraph, but there's always a 6-mark question or 6 or 4-mark question on it. Right, dividends. I'll just explain it. Right, dividends. Right, this is more of text. The terms which are going to be used here, they are from text, and the principles, they come from text. Right, when it comes to dividends, you should know that we have what is called natural persons. Natural what? Persons. And we have what is called juristic what? Juristic persons. A natural person is me and you. Are we together? We're talking of human beings by nature. Then juristic persons, we're talking of what? Companies. Right. So when it comes to payment of dividends, dividends paid to natural persons, they are what? There's noise on the background. Dividends paid to natural persons, they are subject to dividend tax at 20%. Dividends paid to natural persons, they are subject to dividends what? Dividends tax at 20%. All right, let's say we have company A limited, and this company A limited declared dividends of how much? Of 100,000 to natural persons. What this company will have to do, they will have to withhold 20% in the form of what? Dividend tax. So what they will pay out to the natural persons is how much? 80,000. The other 20,000 is going to be paid to SARS. Are we together? Right. That is dividends paid to natural persons. They are subject to 20% dividend tax. Then dividends paid to juristic persons, that is companies, they are exempt. They are what? They are exempt. No dividends tax. No dividends what? Dividends tax. So what will happen is they'll give you a question where a company will declare dividends. The first thing which you have to do is to check the types of persons receiving dividends. Right. If the persons receiving dividends are natural persons, you withhold 20% dividend tax. But if the persons are juristic persons, you do not withhold 20% dividend what? Tax. Why? Because dividends paid to juristic persons, they are exempt. Are we clear?
Yes.
All right, let's go to that assignment question which we're doing. There was a payment of dividends there. There was a payment of dividends. Where is it? Is this one? Dividends, note number 6. Let's look at note number 6. All right. especially those doing FAC3701, there's no question paper, there's no exam which will not test you on this one. It's just a simple principle, but with the good marks. Right, they are saying to us dividends payment. Brick Block declared cash dividends of 400,000 on 31 December. All the shareholders of Brick Block are natural persons, right? They are saying all the shareholders are natural what? Are natural persons. So in other words, we are going to withhold tax on how much? On the total amount paid, 400. We are going to withhold tax on the total amount what? Paid. Of how much? Right, let's continue. The dividend as well as dividend tax was paid in cash on 10 January 2022. The payment of the dividends and dividend tax has not been recorded in the accounting records of Block Brick for the financial year end 31 December 2022. Right, so this one is not complex because we've only one type of what? Of persons, it's natural persons. So our withholding tax is going to be 400 times what? Times 20%. Right. So 20% of this 400 is going to go to SARS. Then the remainder is going to go to shareholders. So what we are going to do in terms of the journal, we are going to prepare a journal like this. Right. We are going to say shareholders for dividends. Shareholders for what? Shareholders for dividends. And then SARS. Or one can write what, but the best thing is to do is to write SARS or dividends payable. Then you credit bank. How much? Bank, you are going to credit 400. Then SARS, you are going to say 400 times what? Times 20%. Then the remainder, or one will say 400 times 80% is what is going to go to shareholders. That's how we account for it. That's how we what? We account for dividends. Right, there's another example given there. Let me see. I think there's an example given. Where is it? Right, this one. Right, let's understand this one. I think here we have more than one shareholders here. On 28 July 27, Money Ltd declared and paid dividends to Mr. Owen, his only shareholder. It's one person again. For the financial year ended 31 December 2017, the dividend tax was paid by Money Ltd on 10 April 2017 to SARS Revenue Services. Dividends paid in cash, 1,000. Amount paid to shareholders as dividends is 800. Right, why 800? They have taken out 20%. Dividends declared is 1,000. They've taken out 20%. Then dividends tax paid by the company, they're saying 0. Dividends tax paid by Mr. Owen, how much?
100.
It's 200, right? 200
Yes.
is coming from what? It's coming from 1,000, né? Because he's the only shareholder.
Yes.
Right, so all right, this one they've done everything for us. So in terms of the general 28 Feb, right, what happened on 28 Feb? On 28 Feb, Money Ltd declared and paid dividends of 1,000. So we're going to debit what? The debited dividends paid equity, 1,000. Right? Then they credited what? They credited the bank.
SARS.
How much? 800. Then they credited SARS. How much? 200. Right, why crediting SARS? Because we owe SARS how much? 200. Then on the payment date, they reversed what they did here. The only thing which was not paid was what? Was dividend tax to SARS, but it was paid to the shareholder. So that's why they credited SARS, debited SARS, and then credited bank. Right, so the principle which you should get here is When it comes to payment of dividends, we withhold 20%. That is, if the dividends are paid to a natural person. But if the dividends are paid to a company, we do not withhold what? We do not withhold dividends tax. Right, I think you are fine with it, no? Anyone with questions there? Anyone with a question on dividends? You're all
No, it's
okay.
clear. It's clear.
Right, people, I think as far as learning unit 1 is concerned, we have covered all the principles. What is left is practice, no? Those who joined us today, please go through recording 1 and recording 2. Then we'll take it from there. Those who have been with us since day 1, please revisit those recordings and try some questions. Right, so what we'll do next week, we're going to do a comprehensive question, which is going to test us on everything we have covered so far on IAS12. Right, see you next week.
Hello.
Thank
Hello.
you.
Hello.
Please see the question paper.
Can you look at example 14? I think it got foreign income.
Example 14, study guide.
Yes.
Okay. Example 14 is with the study guide. All right, this one. Uh, $15, $14. Yeah, they're okay. Thank you so much. All right, example 14, there's foreign income. Remember, I was looking for this one. You see, foreign tax here is included in what? In income tax note here. Then again, it is deducted here. Where is it? Here. Right. This is the part which I said to write it down in case you write the exam. Thank you so much.
Hello, can
Right,
I ask
so-
something, please?
Yes, madam.
I see you using a tutorial letter for 3701, but I'm doing 3764. Is it fine?
No, it's fine. Or it's your first time. People, 3764, they combine the 3701, 3702,
Yes.
3703, and 3704. That's why on the timetable, initially, I had put it throughout the week. On Monday, Tuesday, Wednesday, Thursday. Right. Then the disadvantage of using the 3764 study guide is it is not detailed. They keep on referring us to the textbook and the accounting standards.
Okay.
So if you want to be on the safe side in terms of the detailed notes, look for the study guide, look for the FAC 3701 study guide, FAC 3702 study guide, FAC 3703 study guide, and FAC 3704 study guide. These study guides, they are detailed compared to this one, 3764. They keep on referring us to the textbook and the standard.
Okay. Okay.
Right,
Thank you.
that's the story, né?
Yes.
You are going to see that on learning unit 2, it's on PPE, né?
Yeah. PPE.
Yes, I'm going to use the 3702 study guide.
Okay.
Why? Because PPE is well explained there. They give some notes on the study guide and some good examples. But with us, I think it's only line items 4 or whatsoever. Right, that's the story, né?
Okay,
Don't
thank
panic.
you.
Right.
All right.
All right, good people. See you next week. Bye-bye.
Bye.
So tomorrow no class.
Not tomorrow.
Tomorrow.
Tomorrow no class. Tomorrow no class. Tomorrow no class. Except for
But you
3702.
said you adjust the timetable.
I said what?
You
Yeah,
said the
and